The Bank of Canada is about to shock the Canadian housing market. They're not going to shock you. They're not going to shock me, because if you're watching this video, there's a good chance you understand what's going on. But sometimes we forget that a large percentage of the population of this country doesn't really follow along what's happening. I kind of think about it, it's like me and reality TV. My wife loves to watch reality TV. She knows everything, what's going on with every show. I have no idea. I have no interest. Once in a while, I'll hear something and I'll make an assumption about, well, what could be happening in that show. I don't know if that's a terrible analogy, but what I will say is that there's a good percentage of Canadians that are not really following this along that closely. And the proof is these YouTube videos. I know that my channel gets a pretty decent amount of views. I'm by no means the biggest on this platform that talks about the housing market, but even the very, very, very biggest channels are maybe 40,000 subscribers. Nobody's in the millions, right? And that means that there's a group of us that are very, very interested, and then there's everybody else. So in today's video, we're going to talk about how this is going to impact everybody else. My name is Tom Storey. Thank you for being back on this channel. If you watch today's video and learn anything new, if you could hit that like button, I'd appreciate it. Also hit that subscribe button as well. If you're looking to buy or sell in the Toronto real estate market, you can book a call with our team below. So on June 5th, which is very, very soon, on July 24th, which is one day after my birthday, or September the 4th, the Bank of Canada very likely will cut rates. I can understand why a lot of people think that they shouldn't cut rates, why they should hold this for a long period of time, but it's looking like every indication that we have, unless inflation bumps back over 3%, our job numbers are wildly wrong again, there's a good chance one of those three dates rates will come down 25 points. So what we know, what I mean by that is me and you, we know that a 25-point rate cut, or even if there's two of them over the next three announcements, doesn't really change much in terms of the financials on the carrying cost of a property. Now, for people that are right on the edge, that little relief could be helpful, but it's not making a big difference. We've helped a ton of buyers over the last 12 months here in the Toronto real estate market. I don't get too involved in the finances side of things. I let the mortgage brokers deal with that. But I'm almost positive that 90% of them took a fixed rate, because at this period of time, an insured mortgage fixed rate you might be able to get in the high 4.99, or an uninsured mortgage in the low 5s. And this is all what I think is kind of common sense to the people that are interested in real estate. We know what Bank of Canada does with the overnight rate does not directly impact the fixed rate. Of course, the reaction to it and what happens with a 5-year bond yield could eventually impact it, but somewhat indirectly. I think TIF and all the other decision makers at the Bank of Canada really, really, really want to get this right. And that's why they may wait a little bit longer for that first rate cut. We don't want to cut and then have to increase again. But we do know that when they start cutting, it's going to be somewhat rapid once that first cut happens. And I think they understand that everybody else thinks that as well. When that 25-point cut happens, whether that's June, July, or September, news headlines are going to say something along the lines of Bank of Canada's first rate cut since they first started raising rates in March of 2022. That's probably not actually going to be the headline, because that is way too long, but you get what I'm trying to say. Or Bank of Canada cuts rates. Are buyers going to get back into the market? Those headlines are going to be everywhere. And every single real estate agent is going to share that on social media. And eventually that will get in front of the people that maybe aren't really following this along, but have a little bit of interest in it. And that first rate cut is going to signal that it's just the beginning here. And they're going to continue to cut moving forward. And maybe for buyers, this is now an opportunity to get in. And although this doesn't change the financials very much, we do know that this is going to create some level of confidence for buyers that have been sitting on the sidelines. Now, I think if you're waiting for the cut to happen and you really want to get in, it's not going to help your situation that much. In fact, prices could go up a little bit, but there's still going to be this massive buyer pool that needs that thumbs up from the Bank of Canada to say, hey guys, it's not going to go up anymore. Go do what you need to do. And when that first cut happens, you could have a flurry of activity in that first 30 days, primarily actually in that first-time homebuyer segment of the market. Potentially some investors have been waiting with a bunch of cash are now like, okay, this is now a time that makes sense for me. So I think that first cut is going to signal it's okay for potentially first-time homebuyers or investors. But when that first cut happens, could it actually decrease inventory even more? Now, I work in the city of Toronto. So if you're new to this channel and this is your first video, I primarily just focus on what's happening in the city of Toronto. What I know right now is we don't have a lot of houses. but we have a lot of condos. And we have a lot of condos on the market because of interest rates. Because interest rates are high, investors are losing money every single month. They're cash flowing negative. The numbers just don't add up anymore, and they're putting their properties on the market. And there's a good chance a lot of these people took the variable rates, rode the wave for a long time, and have been really feeling it for the last 2 years. But if they now know that their condo is sitting on the market, it's not really getting a ton of traction, it's tenanted, which we've talked about in other videos, makes it very, very difficult to sell, but they're seeing the relief coming. Okay, they're starting to cut the rates. Maybe I don't have to sell this. Maybe I can take this off the market. I actually think if you're a buyer in the market, this won't be a good thing for you because we don't want inventory to come off. And despite what a lot of people may think, you might think that real estate agents like myself just want prices to keep going up and the market to be crazy at all times. No, we work with buyers and sellers on both sides. I love a boring market, but it doesn't seem like that's ever going to happen here. We have really slow markets, we have really fast markets, but we rarely have something in the middle. So when these rate cuts do come, because they probably will, right? There's a chance that for freehold properties, prices keep going up. And there's a chance that for condo properties, it goes back into a more balanced out market. But that's just an educated guess. Thank you so much for watching. My name's Tom Storey, and remember, home is where your story begins.